Hello, this is Mike Swanson of WallStreetWindow.com. I've got a very special guest with me today. I've got David Skarica, who runs the website addictedtoprofits.net. And I'm going to show you a couple of charts real quick to get us started here. But one thing that's happened over the past two trading days, Friday and today, is there have been some big sell-offs in some of the most popular stocks in the financial markets. This is Apple. And this sell-off in Apple came on huge volume, and now it's closed below its 50-day moving average. Here's Amazon, which touched the 50-day today and has bounced off of it. Here's Google, that's done the same thing. NVIDIA had a horrible down day on Friday on record volume, 90 million shares from NVIDIA, the biggest one-day of volume ever. But some of other stocks that have basically been the momentum leaders since the beginning of the year across the board, such stocks fell. Microsoft was one. I put up Win because it's not a tech stock, and it also declined. But there's about, let's say, 20 stocks like this that have been the leaders all year in S&P and the NASDAQ. And all of them basically got hit very hard on Friday with follow-through selling today. But the rest of the market has done okay. It hasn't collapsed. It's hung in there. And they're saying on CNBC that this is really a great value play. The money's coming out of the hot stuff and into stuff that hasn't gone up so much. And therefore, we can see the continuation of the averages just going up and up and up. And you should just simply rotate to or buy more and double down. So what are your thoughts on what's going on?
Well, like when you look at that, what people have to understand, and this is kind of like when I actually wrote Mike the other day, and I said I think we should do a podcast or a video cast after the market really fell on Friday, but part of the reason why is quite simply is I think that you're talking about the market selling off, or the tech stock selling off. But one thing that people understand is that this is different from the late 90s when really outside the tech sector, everything was actually not that badly valued. And, in the mid 2000s, it was real estate in the United States and some other places which were bubble. And this time it's kind of like, some people are actually calling it like the everything bubble, where not only are these tech stocks a bubble, maybe they're leading the way, they're the most visible, but you've got real estate, not so much in the United States, outside of select cities, but more in Canada, Australia, London, Hong Kong, some of these major centers around the world due to cheap money. And then you also have, like if you go look at the price to sales of the S&P 500, the median price to sales, it's back where it was in 2000. So, okay, maybe the craziest bubble stocks are, Tesla or something like that has no earnings and trading at a huge premium to sales, and Tesla's got a bigger market cap than like Ford, right? So maybe that's the most obvious. But if you go look at these stocks that are the large cap stocks, like 3M or IBM, and you go look at their like price to earnings ratios, you're going to see that these companies like 3M, which has gone straight up, is now $207 a share, has the price to earnings ratio of 25. This is a big, large cap company that doesn't have a whole lot of growth. So the bubble is kind of everywhere. But right now, we haven't even really seen the sell-off. Like you said, we've just seen this rotation. And like, for example, 3M was up today, and I think it was up on Friday as well. So it didn't even get taken down in any part of the sell-off. So you're just seeing people buy those stocks, or even the banks bounce back a bit the last 2 days. And we're seeing this rotation into these so-called value stocks. So we haven't even seen anything happen yet. And here's just example of how insane things are going right now in terms of even these other stocks being bubbles. 3M in 2014 had $31.8 billion in revenue. In 2016, it had $30.1 billion. So the revenues at 3M fell almost 6% in that 2-year period from 2014 to 2016. Yet the stock shot up like crazy. Then their net income stayed like flat. And part of that was due to stock buybacks and all this sort of thing. So it's just like this bubble and everything from real estate, like I said, in some countries, to large cap stocks, to tech stocks, to virtual currencies like Bitcoin. So that's what we're really seeing is a bubble and everything. And what I'm finding funny right now is, unlike Mike and I are both showing our age here. We're both, Mike's a little over 40 and I'm about 40 right now. And both of us were around during the .com bubble. And back then, if you remember, people were just chasing .com stocks and day trading .com stocks. And in the mid 2000s, people were, you see the movie The Big Short, people were owning 4 or 5 homes, even though they didn't have the credit to do so, with no income, no job, et cetera, et cetera. And this time it seems that people are more select in their bubbles, right? In 2008, for example, when commodities were going up, the commodities people didn't think it was a bubble, and those stocks all crashed in 2008. And real estate people didn't think it was a bubble, and that all crashed. And, but when that was the only kind of 2 bubbles we had at the time. Now I'm seeing, like in Canada, the people who think that the real estate market there won't correct, they believe that, but they're not really in anything else. They're not in Bitcoin. They're not in stock market. People that are like into these virtual currencies, they think that these, like Bitcoin is going to go to $1 million or something, and it's not a bubble right now. Okay. And then the people who are in these high momentum, high beta stocks, they think that those are going to keep going up. They think that Amazon's going to keep going up, and Google's going to keep going up, and Nvidia, et cetera, et cetera. So what's really interesting about this bubble, it is encompassing all these different assets, and the people are like more individually into each bubble rather than being in one thing. Like in the 2000s, I think it was basically housing and commodities, and that was it. And oil shot up to that 147 right before the crash in 2008. And then in the late 90s, it was tech, and really that was it. And now it's everything. Like, it's not just like the stocks that don't make any money or the stocks that gone straight up like Nvidia. Nvidia does make money, by the way. I mean, the stocks that make no money like Tesla or Snap, or the stocks that have shot straight up like Nvidia. It's also these large cap stocks. You look at their price to sales, you look at their price to earnings. These companies are incredibly overvalued. And it just seems to me that people are inside the bubbles of the sector that they want to believe is going to keep going higher.
Well, in some ways, it makes sense for there to be bubbles or multiple bubbles of historic proportion, because one thing that we've seen over the past 8 years is the response of the Federal Reserve to the 2008 bust hasn't just been to lower rates to 0, but to engage in quantitative easing measures, and so have central banks around the globe. And last year, we even saw negative interest rates from some European central banks. They said it was a historic low in interest rates never before seen in human history. Now, low rates generate overinvestment. There's not enough places where there's cheap investments or investments that make sense. So you get the formation of bubbles. Now, in 1999, there were super low rates then that the Fed created. You had the internet bubble, it blew up, and then you had they lowered rates again. You had the real estate bubble. So now not only have they lowered rates after 2008, but they did the quantitative easing, and we had negative rates. So why not there be record bubble formations or multiple bubbles? I think that's an explanation for why this has actually happened. But let me ask you this, though, for someone, they may hear that and say, oh, I don't care. I just see Bitcoin has exploded over the past 2 weeks. No one was talking about Bitcoin 3 months ago, but now everyone's talking about Bitcoin. Everyone wants to get in Facebook and Apple and Nvidia and these stocks. And now CNBC is saying there could be a rotation to something new that could start to run because these stocks are weakening. People want to make money. They want to be in these bubbles. They want to be in the next bubble. How can they get in? Is it time to buy Bitcoin? Is it time to buy the dip in Facebooks today? Or is it time to buy the bank stocks? They want to make money. They don't care about the price to sales ratio. They don't care about cap ratio. They want to get in. How can they get in?
Well, actually, and that's something else that Mike and I should really try to be adamant about, because The one thing about, me being 40 now, rather than being, in my early 20s, which I was in the late 90s when this all started, was you learn from your experiences, and you start, I think you become more skeptical when you're a little older too. And you kind of see all these bubbles. And I just think that, and I know that people think I'm a gold bug because I've been bullish on gold for almost 20 years now. And, we've had this big correction in gold from 2011. But if you actually look where the real value is in the market, that's where it is. These gold stocks are actually trading. The price to sales, a lot of these gold stocks are actually cheap, and they're trading at cheap valuations. They've kind of lagged gold a bit here on this last valuation. So if you tell me the sector that I could buy right now, and I wouldn't have said this, by the way, last summer, because the gold stocks just had a huge run, but I'll say it now after this consolidation, over the last, roughly 10 months in the gold stocks, is that now I think they represent very good value. And look, they can move. I'll give you a little stock. I don't mind giving you this one. In one of my family's accounts, we own it. It's a little stock called Eurosun, right? And it's just like a little company. They're going to go into production in Romania, right?
Okay.
And this stock just shot up from 70 cents to $1.10 the last 2 days, right? And there's another stock I own called Galani Gold, right? And that stock just shot up from 6 cents to 10 cents. And these stocks are consolidated. Eurosun last fall was 145, so it fell to 70. And then, if you look at the chart of it, I'll get the chart up right now of Eurosun. And this is from Forbes in Manhattan, this deal. Right, and
here, I can pull it up real quick. Oh, you already did. Okay.
You can see it right now. Now it was just because I was on the Hangouts page. But anyhow, you can see that big, and look at the huge volume and this sort of thing. So again, what I was basically telling people is look at stocks like these. Look at stocks like Eurosun and Galani are actually, Galani actually has a small producing mine and a larger producing mine that when gold goes over 13 or 1400, they're really going to ramp up the production. So you can see Eurosun there, you can see Galani here, and you can see again.
This Galani has an interesting chart right now. I don't own it, you own it, but I don't, but it's consolidating there at 10 cents basically.
Yeah, and you can see it consolidated at 5-6 cents. So what we did when we owned this in our publication, when it had that huge spike to 19 cents from 4 cents, this stock did something really interesting. Because they bought back a bunch of stock from a major company. I think it was IM Gold had a big interest in them. They bought back the stock that IM Gold, because I guess then IM lost their interest in the company. So they bought back the stock for nothing. And then last year, when the stock was 7 or 8 cents in the spring, they gave the opportunity for individual investors to double down at their position in a rights offering at 1 penny. So I owned it at 8, right, in the publication. We were able to average down at 1, get our average price down to 4, and then you see it shot up to 19. We sold some into that spike, and then just recently, I just was telling people, look, I don't know when this thing's going to move, but when it was like around 6 cents there, just average in at 6 cents, average in. So what I'm saying is this company has real production. They have the opportunity to really grow this production. They have very good management. And this is the kind of thing I'm telling people to buy, not to chase. So you saw Eurosun, you see Galani, you see these companies with these bases, and then they can really turn around when some good news happens. And because Galani actually announced that they might be in a deal to take over potentially another mine. So, and the one thing I can tell you, now I'm not saying that these stocks are going to do this, but Mike and I have been in the gold market. So I'm going to get a really long-term chart here. I'm going to show you El Dorado, right? And what's funny is recently, I used to be a financial advisor when I first started out in the 90s. And I actually bought El Dorado at around 25 to 50 cents Canadian for my aunt and uncle in their retirement account. And they were showing me their retirement account recently. And I was laughing because they still have a bit of the stock. And even with this big decline that's happened, they're still up like 20 times on their money or something, or 15 times on their money. But Eldorado is like back in the early 2000s was like Delaney now. They had a bunch of mines coming into production. It was like a smaller company. And you can see this stock went from like 25 cents to $20. Now, I'm not saying Delaney's going to have that kind of move, but you can see this in just a few years, it went from 25 cents to $4 a share. These new producers, that's the kind of move that they can have when gold and gold stocks turn around, okay? So that's all I'm saying is that, and I'm looking for, you can hold Eldorado now if you want, but I'm looking for the new Eldorados. I'm looking at Delaney, I think could be one. Eurosun, it could be one. And by the way, Eurosun is run by the same group that ran Desert Sun, that this stock went from like being a 50 cent or stock or 25-cent stock to being taken over at $7 by Yamana. And this group is called Forbes of Manhattan. They're out of Toronto. Mike and I are friends with the guy who's the CEO. His name's Stan Barty. He has a history of kind of doing this. So that's the kind of thing I want to look at right now, are these smaller producers that can go up. And it's not just because I'm a gold bug, because that is where the value now is now. And I've learned, this is where I've learned from experience. The last two major gold bull markets, or the two ways I made money, were getting companies that were growing their resources or growing production that eventually got taken over. And I'm not talking about these companies going up, 100 or 200 or 300%. I'm talking about these companies going up 500 or 1,000%, right? And I know that in the new gold bull market, if Eurosun puts his mine in production and gold goes to 2,000, this can be a $6 stock. That may seem crazy, but it really could be,
Well, I just want to reiterate what you're saying, and that with these type of stocks, there's all kinds of mining stocks and ETFs, right? Well, I'll just say, like, okay, say you buy the JNUG ETF. It's a 3 times ETF, and it can go up a lot when gold goes up, but when gold goes sideways or there's a correction, that ETF completely collapses because it has a decay factor. It's the way it's structured, right? Now, if you buy a mining stock, like you're speaking of, a good one, the best ones, as you're saying, that the ones that go up the most are the ones that are small companies that have bought a property that they have the ability to put into production. So I know that I don't own it, you own it, but the Delaney company has a mine that if gold gets above 1,300, that mine becomes more profitable, and they can, they'll probably put it into production. I own one, IDM Mining, which I've mentioned on my website a couple of times, that is also a company that's looking to put a mine into production.
Well, another thing too about Delaney is, like I said, I bought this last spring, and my average price, because that rights offering I told you got down to about 4 cents, right? So you look at the stock now, and I bought a little more at 6. Say my average price is 5. I'm up 100% right now, right? Well, if you go look at, I'm going to go look at JNUG right now. If you bought JNUG last spring, right, say in April, May, you bought at $40, you're down 50%, right? I'm sorry, but JNUG and Dust, all these things, in my opinion, they're for jackasses, right? Unless you're day trading and you really know what you're doing day trading, you're going to lose your ass on this thing. You're not going to make any money. The only way you made money in JNUG is if you bought the exact bottom. And the people that are bullish on gold probably didn't buy them, or people bought into momentum going into the spring. So with something like Delaney, I could see, and I own some gold stocks, by the way, near the bottom late last year or early 2016. I bought some, right? But what I basically did was, when the rally happened in the spring, I was like, well, look it. The rally's already 2-3 months old. I know that some of these smaller producers or junior companies that have resources are the ones that are going to move, right? So let me, buy these sorts of things, and then I don't have to worry about timing it so much. Yeah, because like I said, if I had, say, in April or May bought JNUG, I'd be down 50-60% right now. But because, for example, I bought Delaney, right? I was up. I was up. And by the way, with Eurosun, it just didn't go straight down like that other chart I showed you. It was a different company before, and they merged into Eurosun. And same thing, you could have bought that company, I think it was called Carpathian, the old company. You could have bought that company at the equivalent of probably 60, 70 cents last spring. And same thing, you'd be up 50% now instead of being down 50 or 60% with JNUG. And look at, I know people are obsessed with trading. They're obsessed with ETFs now. But look at, if you really believe that gold's going to go into a new bull market, for example, you're not going to make a lot of money in these 3X ETFs, because as soon as there's a drawdown or a correction, you're going to lose your profits in that correction. The way you're going to make money is to be in these smaller miners that have the potential to increase production or increase resources. And the biggest thing you're going to have to do, and it's really simple, people don't like to do this anymore. You have to think. You actually have to think. You have to use your brain, believe it or not. You know, because
you have to pick out stocks.
You have to pick out stocks. You have to be able to see that these stocks have good management, some potential for growth, instead of just saying, well, gold's going to go up, I'm going to buy JNUG. And I think that is what the ETFs, in a way, I think have made people very, very lazy, right? Because one reason, let's face it, that NVIDIA and Amazon and Apple and all these things are going straight up isn't just because individual investors, okay, want to buy all these momentum stocks. It's because the individual investors just want to buy the QQQ. And these stocks, especially like Google, Amazon, and the larger ones, they're the biggest makeup of the QQQ. So everyone just goes into the QQQ. The QQQ is going to buy all those stocks, and then it pushes the price of all those stocks up, you know?
I'm going to show people, kind of emphasize what you're talking about. Okay, here's a chart of here's a chart of the IDM mining, which I own, and it's very similar to Galani. I just kind of want to really emphasize this point.
1 second, I'm just going to get out of this so I don't make that stupid.
Yeah, well,
yeah.
So I bought this stock last year in April around 9 cents, and like your Galani, it went up, and then it peaked in July. But all year, it really hasn't done much this year. It's basically trading between 17 cents and 13 cents or so. But unlike that JNUG, you know, it's basically going sideways and holding up just fine. And I own it. I'm not scared that it's going to go all the way down to where it was. But if I own JNUG, I'd be scared it would erode every single day, right? It could be down 30% a week, and it's crazy. But the thing about it is this stock goes up just as much as JNUG goes up when JNUG goes up, and it doesn't collapse like JNUG. And your Galani is the same way. And both of these are very similar stocks and companies. But what I want to really tell people is that you mentioned, like, you've got to really, if you do JNUG, you've got to really time gold perfectly, basically. And that's why you're forced into short-term trading.
Mark, let me show you another one. And I don't recommend.
Finish the point real quick before you do. But the thing, I just wanted to say that this stock and your Galani stock, they're consolidating right now. They're not likely to really explode and go up until gold goes through 1,300. I think there's a possibility we could see that start to happen this month. But these stocks are just going to sit there until it happens, which is fine, you know, because that means you don't have to time it perfectly. You can be happy to hold stocks like this, pick them out. And now I'm not saying you put all your money into one or two stocks. I'm not doing that, but we both own a bunch of them. But that's how we're doing it instead of buying the JNUGs and so forth. But we're kind of waiting for gold to go through 1,300. These things to really start to go up, and you know what'll happen. No one wants to buy them until these things start to move. You know, once this gets, the higher something goes up, the more people want to buy it. That's what we're learning in the financial markets. But what were you going to say?
Well, and then actually, by the way, my average price in Euro Sun is like 90 cents, right? So I actually saw it go down to 70 cents, but the same thing. I saw it consolidating. I wasn't worried about being down a little bit. And then all of a sudden, boom, I'm up 20% in it, right? This is another stock I did this in, Black Iron, another Forbes in Manhattan company. They have, they're going to put into production an iron ore property in the Ukraine. And what happened was an iron ore prices tanked. They put it on hold. But what they were doing is they have a lot of cash, and they were just buying back stock at 2-3 cents. And by the way, I'm for buybacks then. If your stock has collapsed in price and it's good value, yeah, a company can buy back stock. I just don't like the buybacks when, you know, you got Apple and all their scumbag insiders are selling. and they're buying back stock at record highs. That's when I have issues with it. But if you're buying back stock on your record low prices and you're about to go into production, or so they announced that they're going to put this thing into production, and same thing, you're talking about it. I wasn't even thinking about this stock. So I first bought it in the teens back in 2013, 2014, something like that. And then I averaged all the way down, where again in the letter and in this account of a family member, average price was down to like 5 cents. And then boom, it shot up on that news that, they're going to put this mine into production. And now I'm up over like 100% on it. Right. And if you go look all the way back to the top of the commodities market, the stock was over $1 at one point. So I'm not saying it's going to do that, but it's what you're talking about. You get these companies, because that's when the big exponential gains come, when the commodity like gold, silver, or copper, whatever these things are producing, goes up in price and these things start production. That's when you can get a 5 cent stock going to $1 or $2 or all this sort of thing. And now is the time to be accumulating these kinds of companies. Like people might say, oh my God, these are just little crappy junior stocks. And well, yeah, no, not crappy, but yeah, they are very volatile stocks, but risk is a reflection of price. And at 3 or 4 cents, with the stock had a lot of cash in the bank, was buying back their stock, which by the way, was also putting a buffer underneath the price at 3-4 cents on black iron. It was really a low risk kind of trade, and you had to sit there. You can see it did nothing all 2016. It just went between 3 and 4 cents, and then boom, or 3 and 5 cents, and then boom, it takes off to 16, and now it's like 10 or 11 cents. And that's kind of what you can do with these companies, I think, in the next 12 to 18 months, because some of these companies are still so beaten up. Even if there's a big bust in the stock market, right? They're not going to fall a lot. Like you look at, I mentioned Galani, like what's the worst case scenario? Probably there's a crash in the market and juniors get taken down. Galani might go back down to 6, 7, 8 cents, right? And there's a few of these companies that could do that. But, but really there's very limited downside in that sector. It's more like the early 2000s than it is 2008. In 2008, the problem was this sector had run up with the stock market from 2002 to 2007, 2008. But now this sector, like the late 90s and early 2000s, is still very beat up and probably won't have a huge crash or anything if the market tanks and, and that sort of thing. And here's what's interesting about doing this sort of thing too. Okay, like you see black iron at 3-4 cents there, and we go look at this hot stock of the last year, NVIDIA, right? NVIDIA, say $30, $40. Well, you would have made, 3-4 times your money on NVIDIA. You would have made the same amount of money in black iron, and it was a much more low risk trade, because with NVIDIA, you're talking about this is a log scale. You look at this on a linear scale, you can see it's just a matter of when, not if, this company is going to crash, But, and by the way, if we go back, I'll show you so I know there's probably a lot of people like NVIDIA, but it has a history of doing this. I'll put it on a log scale now too, because you can see those increases and declines better in the last bear market. And you can see that NVIDIA went from $36 to $5. And way back in the 2000 bear market, NVIDIA went from $22 to $260. So this is a company that's very high beta and is exposed to a major market decline. And I don't care about what good things they got going on right now. Look, there's one thing that you have to know about technical analysis. If you ever learn one thing, all parabolic charts like this collapse, okay? This is Einsteinian. My friend actually made a lot of money on this. This is one of these cryptocurrencies. You can see it's gone from a fraction of a penny to 7 or 8 cents. This is going to collapse. Bitcoin is going to collapse. All those cryptocurrencies are going to collapse. So what you want to be doing is buying things that could potentially be the next bubble. And both Mike and I think that the gold stocks, after this 5-6 year consolidation, after the huge move from 2000 to 2011, are now set to be the next big thing, when the sector, and it will probably happen out of fear after a stock market crash when central banks are all printing money, when unemployment's going up again, et cetera, et cetera. That's where gold is going to kind of thrive.
What was that cryptocurrency you showed?
This is called Einsteinium. A friend of mine told me about it years ago. Unfortunately, I didn't buy it. It's used.
Is that all? It's only 15.
The market cap, it's not very big. I think it's just like 20, 30 million. It's like a smaller kind of cryptocurrency. It's not that big. I'll do it right now. I'll just get it up. Einsteinium coin, sorry. Right here. This is going to tell us right here on this website. You can see, the market cap is 14 billion, or it's 14 million. So it's very small, So you can see it right here. It actually spiked up to 8 or 9 cents the other day, and you can see right now it's come down a little bit to about 6
How do you
cents.
buy something like that?
Well, you just would set up an account with them, similar to how you set up a Bitcoin, you get a wallet, what's called, and you set up an account to buy Einsteinium, similar to how you would. They have a website and stuff. Let's show you right here. And it will just show you here how to do it and all this sort of thing. Just similar to how you set up Bitcoin, or the other one, big one is Ethereum. So that's kind of how you. What this one focuses on is funding, like science and stuff like that. But there's a million of these right now, and again, it's similar to the, Actually, it even says here. Actually, no, sorry. It says here the market cap. I don't know if that's it though. Anyway, I know it's weird because down here it's saying that it's 14 million, and up here it's saying 105 million. I think it's 14 million down here. So no, it's 105 billion. So up this thing up here, by the way. Sorry, I just figured it out. This is 105 billion is all the cryptocurrencies all together. So you can see this.
Yeah, okay.
This is a very small one right here.
I see.
And you can see the Bitcoin's like here, it says BTC dominance. It means that Bitcoin is, like 40% of market cap of all of these things.
Well, something like a Einsteinium is probably just moving up in sympathy with Bitcoin.
Yeah, it's like the .coms. Like if you remember, even the crappy stocks like the Globe.com, or remember when Books A Million, BAM, announced that they were going to have an online website and shot up. That's what's going on right now, is even the smaller ones, which may not even exist in 5 years, are just going up. And to me, that's what tells me it's a bubble. It's that you're seeing all these cryptocurrencies going up, all like that. All the charts look like this, So, and I seriously doubt. And by the way, you see this in other sectors. Like I remember in 1996 when I started trading. When I was all of 18, 19 years old. And I remember there was a big boom in the juniors before Bre-X went down. And what I remember is all these little crappy juniors, like there were good ones that had big fines that had gone from pennies to $10 or $20, but all these ones, even that had nothing. I just remember the last few months of the bull market in 96, these little things went from 10 cents to 50 cents or $1 for no reason. And that's really kind of what's going on in these cryptocurrencies right now, So.
It's interesting because the Nvidias and the Apples and the Amazons, these stocks all kind of really accelerated to the upside last month, and then they had that day on Friday. So in a way, the Bitcoin stuff it all kind of has gone up around the same time over the last 6 weeks.
Like I was trading this little, and I just got out of the rest of the position today. I was trading this little 3D printing stock. I think I recommended it around 380, 390. You can see it shot up to $6. And what I figured is, you're talking about all these stuff went up at the same time. I figured, like, you look at these little 3D printing companies. I don't own this one. I'm just showing you the charts. What I think has happened is, these things, you can see 3D printing crashed and they'd done nothing for a year or two. I think this little move in April, May was just shooting up as what was happening in the NASDAQ. This is DDD, which is the biggest one. I just think that this move in May where these things all bounced had really nothing to do with the fundamentals of the companies, or even though you think the 3DD broke resistance here. I just think that they shot up. Like a similar trade happened in the uranium stocks late last year, is that the uranium stocks shot up. And what would really happen, I think, in retrospect, was all these commodity plays just got hot after Trump being elected, because people thought there was going to be all this infrastructure spending and it was really good for oil and gas industry. And these things all went up in sympathy. And that's why, actually, if you go look, Mike and I did a podcast in January of this year, when this shot up and this thing's trading at 70, 80 cents, we were saying stay away from the uranium stocks. We were saying that, look, they're really not going to go any higher. And what happened is my trigger was Cameco had this gap down on the earnings here. And this is the leader. And I was like, well, I don't think you're going to have this big boom in uranium stocks in the next 6 to 12 months if the leadership stock just had this huge, gigantic gap down. It just tells me that it just, like, the momentum of the markets swept these things up. And that's the problem when you have a bull market that's 8 years old. When you have all these bubbles, when you have all this cheap money, it just sweeps these things up for no reason whatsoever. And then people get sucked in by it. And with me in the 3D printing stocks, I was like, okay, I was lucky enough to be in this one cheaper and it went up, but I'm getting the hell out because I really think it just got swept up by the bubble. I'm not fooling myself and thinking I'm a genius. I just think I was lucky enough to buy something because I thought it was cheap, and then it just got swept up.
Well, I think the average person is in funds there and the ETFs and whatever, but there does seem to be some hot money out there that is moving from one hot group of stocks to another. So I think that could be an explanation of what's going on. There's no news like the uranium stuff. There was no news around that move, just like there's no news around this 3D printing thing popping up, or the marijuana stock thing last year that people will try to do every couple months, it seems.
Yeah, I just think that's what it is. It's just when there's cheap money sloshing around and the bull market's gone on for so long, it just money flows somewhere, and the marijuana stocks rally, the 3D printing stocks rally for a few months, or the uranium stocks rally. And see, like, look, and here's what happened to me during that election trade is, even though this is another stock we bought, I bought this at like $1.30, spiked here. We sold this basically between $1.60 and $2, right? And I can see it's right back to where it spiked. And I just thought that I really believed that maybe Trump was going to try to do all these things, that he was going to try to shift the economy and do the economic nationalism and really try to promote oil and gas and infrastructure. And part of it, why I don't think it's going to happen, is not his fault. I think the government is extremely dysfunctional. And I think that, there's this lawsuit now trying to say he has a conflict of interest with his businesses. And I think the people that hate him so much don't want him to accomplish anything. Now, I'm not defending him because Trump is also a nut who changes his mind every 3 days, right? But I just think it's just you have this huge government debt. There's really not leeway to do anything fiscally. And you also have more polarized politics. And by the way, the Republicans did the same thing to Obama. They didn't want Obama to do anything. So the problem is nothing can get done. Nothing is going to happen. Right? You ever see that Seinfeld episode on like, nothing? It's like the show's about nothing, right? Well, that's kind of what's going on. Nothing, I don't think, is going to get done of any significance. Maybe there'll be small tax cuts and small reform, but I just don't think that anything is going to get done. And that's why these trades, in my opinion, are all going to go by the wayside. And one thing, by the way, when we look at these FANG stocks, I'll look at Netflix here, by the way, and you can see what's happened.
Wow.
Off a cliff too. But what happened in the market was that these stocks were lagging for a little bit after the election, and all these other sectors, like I showed uranium, I showed you that little Athabasca, that little oil and gas company, the banks did well for a bit. But then we just reverted to where we were the last year or so. We just reverted back to the FANG stocks and the tech stocks leading the way, which was almost a sign that, again, like I just said, nothing is going to happen, And like, look at, again, we look at Netflix and there's another parabolic chart for you, you know.
Well, as we wrap up, do you have any thoughts on where things might be headed over the next couple of weeks or next couple of months?
What I want to show people, and I don't mean to try to scare people, if you don't mind me doing another couple charts here, is what's interesting is we are now, if you believe in the seasonality of the stock market like I do, let me show you actually a quick of a recent chart. Just something's really interesting going back in the market, this whole bull market, okay? So we go back to 2009, 2010 here, right? And what we'll see is, in 2010, there's this correction here in the summer into the fall. 2011, the same thing. Wasn't as big a collection in 2012, but really the market had not moved much higher than its spring high here, went sideways. 2013, it went up essentially the entire year. In 2014, same thing, the spring here. You can see there's this correction in the fall. 2015, the same thing. Even if you sold in the spring of 2016, the market was a bit higher, but really didn't do much into the fall. So there's that old saying, sell in May and go away. And what we can see here is even in this huge bull market of the last 7-8 years, really every single year, if you had sold in the spring or early summer, you had not basically missed out into any gains if you waited till the fall to buy. Either the market was flat or there was a correction of some sort, really outside of 2013, okay? Even in a huge move with the S&P from 2010 going from 1,000 to 2,400, okay? So we are now in that weak seasonal period of the spring into the fall. So that's the number one. And all the major crashes in history, right, have always occurred, again, in that summer into the fall, okay? Well, actually, no, what I'm going to do is I'm going to do 1970s. I'll go Dow Industrial Average so you can really see it here. Right, and you can see this is 28 to 29, and you can see the market blew off into August, September, and then it completely fell apart here. And what's interesting is that we're doing something similar here. Now, if we peaked out now, we'll peak out a little earlier. But this is the spring, and there's this consolidation here, a little pullback, and then the final blow off. So maybe we get one more blow off, maybe we're topping now, but all I'm trying to show you is in the spring into the fall, you get this big, move down. You can see this big move up and down, and then that was the Great Depression afterwards, right? If we go and look at 1987, right?
So you're arguing that if you sell in the spring, historically there's a pullback anyway in the fall. So even if it's you're not missing nothing.
Yeah, like even if, like you look at 87 here, you can see similar to 29, a consolidation in the spring, this blow off in the summer. But even if you had done the sell in May and go away, you didn't get the exact top, but then you were able to buy back much lower during the crash. And even better, like psychologically speaking, you didn't have to be over invested during a crash watching stocks fall 20, 30, 40% in a day. And if we even go and look at the final thing I'll look at here is 2008, right? Same kind of thing. The market rallied, actually held up into May, sell in May, go away, and then had this decline, had this little rally in the summer, and then completely fell apart. And so, like, the thing is, I don't know if we're going to get a crash, whatever. Like, this market's gone way higher, way longer than I thought it ever would. But you can see that seasonally, this is the time from May, June, July into September, October, November, when the market historically has these crashes or has these big corrections, right? Even if you look at like some of this is now will be the last one I do, right? I think it's just good to look at these charts. Even if you go look at 1998, which was a major correction, almost took 20% off the S&P, you can see this May area here, this last blow off, and then this huge correction here into October, right? So that's usually when these things, kind of happen. So my argument here is I would not be overly invested right now. I'd be looking at a short place. and on the rallies and et cetera. And to me, the real question is now, are we just going to top in the spring like we saw we did in 2008? In 2008, the rally topped out in May, and then the market went down into November. Or are we going to have one of these final move higher after a little correction here that happened in 98, that happened in 87 and 29? So are we going to have a final blow off into the summer, or are we going to peak now? So what I'm doing to kind of play that is, I've shorted some stocks now, and if we get that blow off, I'll short some more in the summer. And if we don't get the blow off, the market will start to roll over, and I'll short more then.
Well, I think one thing about the past couple of days is the drop in these tech stocks took people by surprise, and really there's been a feeling everyone has had, you, me, everyone involved in the financial markets, doesn't matter who you are, what you're doing, that nothing is really happening, that the volatility has shrank to such low levels. It's like we've never seen it so low for this long before. And now maybe things are starting to happen, which means we're going to have to talk. We're going to have to do more frequent. We haven't done, we did a video like this recently, but before that, it was like a couple months ago. So we were probably getting into a situation where there's going to be more things happening, more things for us to talk about and be on top of, because things have to change. We got to adapt.
What people have to know too is that the markets drop way faster than they go up. And I got this Netflix chart here to show you this, that Netflix went up for basically a month and a half, for 45 days, from late April into the middle of June, or just a few days ago, and goes up from 150 to 166, and then it takes all that back in 2 days, right? So that's how markets are. They go down faster than they go up. And I'm not expecting the market to fall off a cliff right now. I think you're going to be in a topping process, and people believe still they want to buy the dip. So there's no doubt in my mind that the market could even bounce the next few days, or if we see a 5 to 10% correction, say in the NASDAQ, people will buy that dip, and there will be maybe it'll be a start of maybe a bear market rally. There will be a rally. So there's no doubt in my mind, but I think now you can now see the thing unfolding, and potentially the decline happening. And look at Netflix, for example, since the beginning of the year. There were some small declines here in April or in February, but nothing of this magnitude with this type of volume. I guess the one in April had some volume, but that was on earnings too, right? So this one is just with no news or anything, and we're seeing a big pickup in volume. And it wasn't this magnitude. Like, this was 147 to 138. You do the quick math on that, that's a 7% correction. This is 166 to 150. This is 11%, and it's in 2 days, and it's on big volume with no news. So I think we're definitely seeing maybe the makeup of the market kind of change.
Yeah, and we'll be on top of it with everyone. Well, thanks for taking the time to talk with me, and people should check out your website, addictedtoprofits.net, and we'll talk later.
Yeah. Thanks for having me.
Yeah, thank you.